If your next investment is another property in this market, you might be asking the wrong question. For the last 30 years, everybody wanted to know which suburb is next. And now more and more investors are asking, which business should I own? And I think that's much more interesting than anything the Reserve Bank has to say later this month when they announce the next rate decision. Every time there's an RBA announcement, the media just immediately starts talking about property. Will prices go up or down? Should investors go back into the market? Well, maybe. But I think there are a lot of people missing what's happening. The Reserve Bank doesn't decide where capital goes. It simply changes the cost of moving it and what investors choose to do with that capital and leveraging their equity. That's the real story, and this is changing. According to Jim Chalmers in early last month, Australia is experiencing a boom in new businesses. I can tell you, as someone who has boots on the ground, I see the SME sector every day. I have for the last 13 or so years. I don't buy it. In my experience, those numbers don't tell the whole story. It's just absolute political spin. And a lot of these new registrations are simply restructures from trusts or people moving from one entity to another. Nothing new's actually been created. And then you've got probably thousands of Australians registering as sole traders while they're still working full time, not because they've discovered a lifelong entrepreneurial calling, but because household budgets are under pressure and they're looking for a second income. So when people like Jim say Australia is full of new entrepreneurs, well, in my opinion, based on what I see out there every day, it just doesn't stack up. And here's the question I'd rather ask. Why are we so obsessed with starting businesses when there are thousands of good businesses already built? I've started enough businesses in my career to know exactly what it takes. I've lived through the uncertainty, the sleepless nights, the years of building something from nothing, and I'm glad I've done it. But if you ask me today whether I'd start another business, I wouldn't. I've had 7 in my career. I currently have 2. One of them is passive. And with the new CGT rules, it's just not worth the risk of starting a new business. But I'm actively looking for my next business to buy every day of the week. Why? Because when you build a business from scratch, you're creating value from zero. And aside from all the risk of even just getting it to break even, if you do, and if you eventually sell it, you'll create a very significant capital gain. But when I buy an established business, I'm buying an asset with an existing cost base, existing cash flow, existing customers, people, systems, years of someone else's hard work. And when I go to sell it again, if I sell it even for the same price I bought it for, well, there's zero capital gain compared to if I started a business and sold it in less than 15 years, which is where the first major CGT discount kicks in. So to me, that's just a much more rational way to deploy capital, which is why I think the more interesting shift isn't whether interest rates fall or rise by 0.25%. It's that more and more property investors and working professionals are beginning to realize there are alternatives to buying an investment property and alternatives to starting another business from scratch. But if you are a first-time business buyer, it is daunting. So tomorrow, check out my video about the first 12 weeks after buying a business and how to accelerate the business to passive ownership quickly.